This is Scott Becker with the Becker Business Podcast, the Becker Private Equity Podcast. Thrilled to see both of them ranked today in the top 5 of all business news podcasts on Apple. They're there with some great names like the Bloomberg Podcast and the Wall Street Journal Podcast. So thank you to our listeners and to our producer. Thank you very, very much. Today's discussion is don't double down on debt when the market is going well. One of the things that's happened is the market has surged over the last couple months, and you end up with people getting a little bit less disciplined about their spending habits and about their debt habits. And the lesson that we take over time is the markets will surge and then they'll crash and they'll surge again. But you don't want to be caught in one of those spots where you've doubled down on debt or doubled down on spending that you can't stop and have the markets crash. So the reminder here is don't splurge on debt. Don't double down on your spending when the market goes up, at least spending that you can't stop, because it's sooner or later that market goes down. And let's say you have a $2 million net worth and you borrowed $1.5 million, then the market crashes. All of a sudden your net worth is less than your debt and you're really in trouble. The same thing we always talk about. Don't buy stocks on margin. Don't borrow money to invest. Keep your debt under control, keep your spending under control, because the markets won't always go up. Sooner or later, they'll crash. And then over time, hopefully, they'll recover from that. But you don't want to put yourself in that fragile spot. Thank you for listening to the Becker Business Podcast and the Becker Private Equity Podcast.